Hey puppy trades, I wanted to do a video analysis update of the stock market. We'll talk about the S&P 500 ETF SPY, the Dow Jones ETF DIA, as well as big tech like Apple, Amazon, Microsoft, Nvidia, and Netflix. I'll talk about Fastly, Walmart, Boeing, AT&T, oil stocks and XLE, and Carnival Cruise Lines. I'll talk about Bitcoin, Ethereum, Litecoin, and Ripple. And I'll also talk about how the options market is impacting options prices and why even people who don't trade options need to pay attention to the Greeks of the options market, especially implied volatility, because that is ultimately what is driving stock prices, as I will prove. So before we get into that, this is SPY. This is my most basic expectation for SPY, is that these small numbers are a 1, 2, 3, and wave 4 has been put in at the 38.2% retracement of wave 3, which is 403. So that's kind of the first big level. If we're above 403, the length of wave 1 placed at the wave 4 low takes SPY to 430. Okay, so SPY to 430. If it's above 403, got it. What's a more important level to me than 403 is the volatility index, the VIX, holding this high of about 27.50, 27.90. If the VIX does not break back above the May 13th high, then bulls have a lot of rocket fuel. And I think, it's being really underestimated right now how much juice this market has to go higher. I do believe we're going to be looking back at this VIX spike, right? This early May VIX spike, the same way we look back at this late January VIX spike, this pre-election VIX spike, this VIX spike we had in last June, as huge buying opportunities. And I think this VIX spike right here is ultimately, when we look back 2.5, 3 months from now, a huge buying opportunity. And if we're above 27.59, to me, bears are just noise. Okay, so SPY is going to reach 430. And what's that going to be on the larger degree? Well, these 5 waves are going to become part of a larger degree picture. So the larger degree picture for SPY is that this is all wave 1 subdivided into 5 waves. We have an ABC correction. We put in a wave 2 low, and we don't break below the 924 low of 319. So that's really important to realize. We don't break below that low on SPY, but we do on the Dow Jones ETF DIA. So here's DIA. This is very similar to SPY. It's a large wave 1 subdivided into 5 waves. Then we have an ABC correction to put in a wave 2 low. Now, notice that the length of wave 1 placed at the wave 2 low will take the Dow Jones ETF DIA to 372, and the length of wave 1 placed at the wave 2 low on SPY will take it to 460. Both of those targets are the conservative wave 3 target, because in Elliott wave 3, the length of wave 3 is stronger and faster than the length of wave 1. So 372 on DIA is around the equivalent to 460 on SPY, because they are both the length of wave 1 placed at the wave 2 low. So what's different about the Dow Jones ETF DIA is that this low on 924 is broken for the Dow Jones. So on SPY, you can count it 2 ways. You can count it very conservatively and say that's a wave 1, that's a wave 2. Then in the middle of January, we put in a wave 3 high, and at the end of January, we put in a wave 4 low. Now, by this count, when SPY goes on a 5th wave higher, it's completing wave 5 on the smaller degree, but it's also completing wave 5 on the larger degree, and then we brace for a big crash. Well, what's the problem with this count? The Dow Jones breaks below the 924 low. So you can't count this as a wave 1 and a wave 2, and therefore you can't count the middle of January high as a wave 3 or the end of January low as a wave 4. It can only be counted as a wave 1 and a wave 2. So when the Dow Jones reaches its 5th wave target, it won't be completing wave 5 of wave 5 and it crashes. It will complete wave 5 of wave 3. We have a shallow, mostly sideways wave 4 correction. Then the length of wave 1 placed at the wave 4 low will take DIA into the 380s, well past what we called the destination and equal legs target of 372 that we said was equivalent on SPY. So to me, the 460 destination is in sight. And we have that target right now. I do believe it will be reached by the end of the summer. So how are we going to get there? I think it's going to look something like this. This is a wave 1 high that SPY puts in the middle of January, just like the Dow Jones. And this is a wave 2 low we put in at the end of January. So when SPY goes on a 1, 2, 3, 4, 5 waves rally, and it reaches the length of wave 1 placed at the wave 4 low for wave 5, it won't end wave 5 of wave 5. It'll end wave 5 of wave 3. We won't be looking for a crash. we'll be looking for a shallow, choppy, mostly sideways wave 4 before we go on a fifth wave higher. There will be the length of wave 1 placed at the wave 4 low, taking SPY into the 470s, well past what we called the bull flag equal legs target of 461. So to me, it's full bull, and as long as the VIX is below 27.50, this May 13th high, it's pedal to the metal. I think the summer bull market has begun. So that's what it looks like on SPY. That's what it looks like on the Dow Jones. Here's what it looks like on Apple and Amazon. So big tech, will be participating this summer. This is Apple. It completes an ABC correction, and then it goes on a wave 1, 2, 3, 4, 5 that is cleanly subdivided into 5 waves and completes a large degree wave 1. It has an ABC correction. It puts in a large degree wave 2. It's just like Amazon. It's identical to Amazon, even down to the date, where we start a wave 1 in the middle of March. We go on a wave. We finish wave 1 at the end of April. So it's 1, 2, 3, 4, 5. Large degree wave 1. ABC correction puts in a large degree wave 2. The length of wave 1 placed at the wave 2 low will take Amazon all the way to 3,800. That is from 3.5 to 4.30. So in about 2.5, 3 months, we're going to see Amazon all the way at 3,800, and that's conservative because the length of wave 1 placed at the wave 2 low is the conservative wave 3 target. Wave 3 is actually bigger, stronger, and faster than wave 1. It's followed by a shallow wave 4 correction and then a fifth wave higher. So the invalidation and the stop levels for a wave 2 are the 78.6% retracement is the stop. That's 3,025. The invalidation level is the beginning of wave 1, which is 2,881. If Amazon is above 3,025, 2.5 months from now, we're going to see it reach 3,800. So that's Amazon. It's identical to Apple. Apple is also a 1, 2, 3, 4, 5 large degree wave 1 impulse from beginning of March to the end of April, and it's also completed an ABC correction to put in a large degree wave 2 at the 61.8 to 78.6% retracement zone. I believe Apple will go the length of wave 1 placed at the wave 2 low, and it will reach 143 in the next 2.5 months. And I think that's actually pretty conservative. I think it's actually going to go to the 161.8% extension of wave 1, which is 149. So I'm expecting 2.5 months from now, Apple will be between 143 and 149. That would just be wave 3. We'd have a shallow wave 4 correction before we go on a fifth wave higher for Apple. So for Apple, it's a wave 1 over 2 months, placed at this wave 2 low, goes on another wave 3 rally to 143 to 149. Then we have a shallow wave 4 correction before a fifth wave higher takes SPY to 160. That's the length of wave 1 placed at the wave 4 low. So we are going to see 143 to 149 in about 2.5 months. Eventually, towards the end of the summer, we'll see at least 160 for Apple. So I believe big tech will definitely be taking part in this rally. Amazon and Apple are good evidence for that. Even better evidence for that are Microsoft and Nvidia. So Microsoft and Nvidia are extremely similar counts. What I'll first point out, this is the most aggressive, probably the most likely count for Nvidia. It goes on a wave 1, has an ABC correction, puts in a wave 2 low, then goes on another wave 1, has another ABC correction at exactly the 61.8% retracement of wave 1, which is the textbook place for a wave 2 to end. Then the length of wave 1 placed at the wave 2 low will take Nvidia all the way to 697. So 697 in the next 6 to 8 weeks is my time and price target. The invalidation level for Nvidia is pretty clear. I want to see this 513 low of 538 hold. If it does, the length of wave 1 placed at the wave 2 low takes Nvidia to about 700, 6 weeks from now, 8 weeks from now, the max. All right, and that's because this is a 3-week rally, right? It's corrected, and I believe it's about to be replicated. So if we call this a wave 1 and an ABC correction wave 2, then when we reach 697, then that's not the top, right? That's not the top. It would be the conservative wave 3 target. We have a shallow wave 4 correction before a fifth wave higher. So that would be very aggressive, right? What's a more conservative way to account Nvidia that has the exact same target? I think the more conservative view of Nvidia, which to me is improper because we passed the 61.8% retracement of wave 3, is that's a wave 3 high. This is the wave 4 low. The length of wave 3 placed at the wave 4 low is the fifth wave target. It's still 697. It's still in about 6 to 8 weeks. The only difference is that when you reach 697 for this count, that would be the wave 5 high. But I don't even think that's accurate. I think it's actually more realistically going to be a 1-2. Now, why is wave 3 the length of wave 5? Well, in Elliott wave 3, wave 5 is either the length of wave 1 or it's the length of wave 3. So if wave 5 was the length of wave 1 for Nvidia in orange, then the length of wave 1 placed at the wave 4 low means wave 5 wouldn't break to a new high, right? Wave 5 can't end there. It has to break above the wave 3 high. I believe that Nvidia's wave 5, if it is a wave 5, would be the length of wave 3 placed at the wave 4 low. That would take it to 697. So it's the same projection whether you count it as a wave 5 or as a wave 3 of wave 3. But the only difference is if you count this as a wave 1 and you count this low as a wave 2, then when Nvidia reaches 700, that's not the top, right? That's not the top at all. And what it's really looking like is this is the more accurate count because we're at the 61.8% retracement. We have this big reversal. I think it's pretty interesting. This big reversal, this huge downtrend break, this clear new start of a new cycle for Nvidia is just being largely ignored. I don't think we're going to be ignoring this much longer. But to me, the most accurate count for Nvidia is that this is a nest, a 1 ABC wave 2. The length of wave 1 placed at the wave 2 low means that when we get to 697, that's not going to be the top. Okay, so that's Nvidia. There's a Microsoft that's almost the exact same thing, where it's a wave 1 and a wave 2. The only difference with Microsoft, we actually predicted this move before it happened, that the length of wave 1 placed at the wave 2 low would be replicated in time and price. And about 6 weeks from now, we were going to see 258 be reached, and it was reached. But what happened? Well, Microsoft didn't go to the 161.8% extension of wave 1, and then wave 4 passed the 61.8% retracement of the prior impulse. So if we did count Microsoft as a wave 3 and a wave 4, the length of wave 1, which is shorter than this move, placed at that wave 4 low, takes Microsoft to about 272 in the next 6 to 8 weeks, right? So I have every tech stock, essentially Google, Facebook, Apple, Amazon, and all these tech stocks, Nvidia, going dramatically higher in the next 2.5 months, right? And this is Microsoft right now. The most conservative way to count Microsoft is it's a 1, 2, 3, 4. The length of wave 1 placed at the wave 4 low would take Microsoft to about 272. Now, what's the problem with that? Is that that's probably incorrect. I think what Microsoft most likely is, this is a wave 1, this is a wave 2. We have another wave 1. We have another wave 2. And why is this more accurate? Well, because this is a wave 1 and it doesn't reach the 161.8% extension of wave 1, right? So if this was a wave 3, it probably should have reached 267. And if this was a wave 4, we shouldn't have gone past the 50% retracement of the prior wave. So because we're at the 61.8% retracement, this is most likely a wave 2. Microsoft will have an impulsive rally for this box. It's still the same projection. The length of this move, which is shorter than this move, placed at the wave 2 low, would take Microsoft to 272. The only difference is when you get there, you're not looking for, a huge correction. You're looking for the trend to continue higher, right? So essentially, if this is a 1-2, 1-2, then just like Nvidia, that equal X target wouldn't be the top. So the length of wave 1 placed at the wave 2 low is still going to take Microsoft to 272. I'll point out again, the length of this move is shorter than the length of this move. So no matter how you count this, it's going to be a reliable target for the next impulse higher. So for invalidation levels for Microsoft, I think really tight 238 holds. And I think it will hold because Nvidia's already had a clear break at this downtrend. It's already shown that 513 low was Nvidia's low. I think Microsoft is going to be the same thing. But, really the 78.6% retracement is 232. That's the invalidation level. If that holds, I expect Microsoft will reach 272 in the next 6 weeks. So above 232, Microsoft goes to 272. What's also really interesting about Microsoft, besides the fact we predicted that this huge run-up was going to happen, from this zone in late March, is that the options market had some interesting thoughts on Microsoft in late March. So we're going to talk about those real quick, and we're going to talk about AT&T and Microsoft. So Microsoft, if you'll remember, in late March, or whenever it had that huge run into the 250s, it was done with the news catalyst that the Department of Defense had awarded a huge contract to Microsoft. And Microsoft implied volatility was at the very bottom of its 1 year range. So what's implied volatility mean? It means that the options prices in the market were the very cheapest they've been in the past 52 weeks. I think that's really interesting because who's the smart money, right? The smart money is the people who are buying the cheapest premiums and catching the biggest move. So Microsoft is on the list of stocks with implied volatility at the very bottom of its 52-week range on March 22nd, right? So option prices had not been cheaper than they were on Microsoft before March 22nd. I think that's really interesting. What's also really interesting, Microsoft is showing up on the bar chart, straddle, and strangle screener on 324. So what's this mean? What's the straddle screener? A straddle screener is quite literally telling you options on this stock are cheap and a huge move is coming. That is all it's telling you. Option prices on this stock are very cheap and a huge move is coming. It's up to the technical analysis to figure out if that's going to be to the upside or to the downside. But Microsoft was all over the screener saying a huge move is coming, premiums are cheap, right? And then what happens? There's a huge news story about the Department of Defense awarding this huge contract, right? So for traders who are interested in knowing what's the smart money thinking, what's the smart money doing, using the bar chart, straddle, and strangle screener is incredibly useful because it will give you a list of stocks that are going to have a huge move. And if we look at some of these, results, right? I've got so much data on this, but I really think this picture from 106, here's what I look for. Does a stock have more than a year of options trading history, right? That should be a no-brainer. I shouldn't even have to think about that. Second, is the stock more than $15 or $20, right? Don't pick a stock that's, $8, right? And also, most importantly, is the stock consistently showing up on the screener with stocks in the same sector, right? And if those are happening, you've got my attention, right? So this is a picture from January 6th, right? Boeing, Norton LifeLock, Boeing, Dave & Buster's, right? So right off the bat, it's clicking in your head. Okay, this is a reopening stock. Dave & Buster's, Boeing's a reopening stock. AIG is a financial. Simon Property Group is a real estate company. It goes from 85 to 120. Citibank, another bank, right? So two banks right off the bat. Home Depot, Boeing again, right? So Boeing's all over the screener. Simon Property Group is all over the screener. The options market is telling me these stocks are going to have huge moves and they have cheap premiums. So MGM Casinos, Dave & Buster's, and Boeing, all these reopening stocks, right, are on the same screener together. Lowe's, right? Didn't Lowe's have someone on this group, right? Lowe's and Home Depot are both on the screener before a huge, dramatic move higher, right? So what the options market knew that a huge move was coming for Lowe's, and the options market knew that Home Depot was going to move with it and that premiums were extremely cheap. And they told you this, right? They told you this right here. Okay. NCLH, another cruise line. Royal Caribbean, another cruise line. So all these reopening stocks like Boeing and Dave & Buster's and the cruise lines and MGM Casinos are on the screener. Bank of America, right? Bank of America is what? Another financial with AIG and with Citibank all moved dramatically higher. Berkshire Hathaway and Boeing rounding out the list, right? So is this a magic screener? No. This screener will show you stocks that have extremely cheap options and they're going to have a huge move. And I'm not, condoning or recommending options trading or anything like that. But even if a trader doesn't trade options, they have to pay attention to this screener and the implied volatility because at least they'll be looking at stocks that will actually move, right? So Microsoft's options were the cheapest right before a huge contract is announced. And it looks like, those people are going to be happy because this is a 1-2-1-2 nest. This isn't done for Microsoft. Microsoft will continue to move higher, right? AT&T is another example of the exact same thing. So for those of you who remember, AT&T used to not move, right? AT&T used to never move. It used to be painful to look at AT&T, right? Literally painful to look at AT&T. Let's look at AT&T right now because it's not so painful anymore. This thing moves, okay? So this is wave one, an ABC correction puts in a wave too low. Another wave one, an ABC correction puts in another wave too low. I would say that low is a pretty tight stop of 27.89. I'm really using this wave too low of 26.45 as the stop. And if it does hold, then I believe this is wave one, this is wave two, this is wave one, this is wave two. We're going to go to the 161.8% extension of wave one. later this year, I think around October, November, we reached 37. AT&T has a shallow wave 4 correction before going the length of wave 1 places the wave 4 low. I think around January, February of next year, we see AT&T reach 42. I'm looking for, in the very short term, this wave 2 low of about 27 to hold. More importantly, this wave 2 low of 26.69 to hold. I believe AT&T will go to the median of this pitchfork for this wave 3 target. But let's talk about AT&T. So AT&T used to never move, like never, like painfully boring stock to watch. And then what happens, right? So for those of you who don't know, AT&T very recently announced a huge partnership with Discovery. And then in the exact same day, it announced that it was slashing its dividend. And that's a big deal because AT&T is a dividend aristocrat. It's been holding AT&T for over AT&T's been paying a great dividend for about 30 years. It's a dividend aristocrat. And the reason most people hold AT&T is because it has a great dividend, right? So them slashing that dividend, right? They just got rid of so many, retail traders. And we just talked about how AT&T is going to go up. So I think that's pretty interesting. What I think is more interesting, right? So we have this crazy news, a huge merger, and then a dividend getting slashed, right? Very recently in early May. But what's also really interesting about AT&T, on the very last day of April was the cheapest that options had been all year, right? So options had never been cheaper. And the options market is literally telling you a huge move is coming and premiums are cheap. They tell you this right here. The options market implied volatility is at the very bottom, i.e. the very cheapest of its past 52-week range. And it's not just, that. It's also all over, guess where? The bar chart straddle and strangle screener. It's showing up constantly, right? It's showing up. And they're telling you that the large institutions, the big players, they are buying options on AT&T because they know premiums are cheap. They know a large move is coming. And you'll see very often that move is followed with news. Okay, so I just wanted to, give you guys that idea. I like to only look at options that have extremely low implied volatility. I really won't even look at a chart if the IV percentile and the IV rank, I want to see these numbers below 5, right? I would say add that as a filter, to setups you look at, implied volatility, rank and percentile below 5. You'll start having some fun. But that's Microsoft, that's AT&T, that's Apple, that's Amazon, and here's Netflix. I think Netflix right now, this is a pretty interesting setup. This is a very clear, at least the wave 1 and wave 2. The 161.8% extension of wave 1 is the wave 3 target as the ABC shallow wave 4 correction. And then the very conservative thing to do is take the length of wave 1, place it at the low of wave 4, and say, in the next 6 months, the wave 5 target is about 600. Okay, so that's extremely conservative. I don't think it's going to take 6 months. I don't think we're going to stop around 600, 620. I think what Netflix is actually going to do is this is a wave 3 and a wave 4. I don't think wave 5 will be the length of wave 1. I think it's going to be the length of wave 3, and we're going to see this entire 4-month run replicated in the length of wave 3 places the wave 4 low. Will take Netflix to 743 in the next 4 to 6 months. I think 6 months is kind of the ideal time target for me right now. The stop loss is very clear. This is a wave 4 being put in at exactly the 38.2% retracement of wave 3. And I believe the length of wave 3 placed at the wave 4 low will take Netflix conservatively to 743 in the next 6 months. The most conservative thing to do would be taking the length of wave 1, placing it at this wave 4 low, saying 600 hasn't been reached yet. Netflix will reach 600. But the levels to the downside are very clear. This wave 4 low of 458 is also the 38.2% retracement. Very important level. We need to make sure it holds. If it does, I believe this is wave 1. An ABC correction puts in wave 2. And we're about to start wave 3. And that's another reason that I think that this wave 5 ultimately will go much higher than 600 is because you don't even need to pull out the fib tools to see that the 161.8% extension of this wave 1 is going to be well above 600. It's actually going to go off my chart here. So see how if I say that this was the beginning of wave 1 of wave 5 and we put in the high of wave 1 of wave 5, then the 161.8% extension, which would be wave 3 of wave 5, is well off the chart. And I think that that's actually going to play out. The length of wave 3 places the wave 4 low will actually take Netflix all the way to about 740. As crazy as that sounds, I think the boldest thing to do right now is to say, did we just rotate into tech? And even more bolder than that, Was this sell-off a rotation into the stay-at-home? I think the charts support it, but I think ignoring Boeing and American Airlines and Carnival Cruise Lines and some oil stocks and not having any exposure to that side of the market and just assuming we've rotated into tech growth and stay-at-home is extremely stupid. Okay, so that's Netflix. If we're above about this wave 4 low of 458, the 50% retracement of 432 is the 50% retracement of wave 3. That'd be the real invalidation. I think what's really interesting about Netflix, besides the fact that we hold that level, my next target is about 743 around this time last year, right? Because we talked about in this video how Amazon was going to go much higher. And now we just talked about how Netflix is going to go much higher. This is from June 3rd of 2020. I said Amazon and Netflix, it's not safe to, I was telling people not to short the stock market, right? That was even on my mind. It's hilarious. But way back on around this time last year, it was the exact same thing. Huge bull flag on Amazon, huge bull flag on Netflix. We're going to see these equal legs targets be reached, and they were, right? They were eventually reached. I'm not taking a victory lap. I didn't even have time targets, but the point is that this is seasonality, right? A lot of people don't believe in seasonality. They think it's voodoo. Seasonality is not voodoo. It's one of the most statistically sound, ways to, measure time and trading. And right around this time last year, it was the exact same setup for Netflix. I mean, this is almost identical, right? A huge bull flag. And then Amazon, right? Amazon's bull flag. We've known about Amazon's bull flag for a long time. This is a huge bull flag for Amazon. And we're starting to, see this play out. Let's see right now. The length of wave 1 placing the wave 2 low is going to take Amazon to about 3,800, in about 2 months, 2.5 months. I don't want to see 3,025 broken. So I've covered all tech. Let me do Fastly real quick. Fastly is another one of those stocks that makes me look and say, man, did we just rotate in the growth and stay at home? It has to be soon, right? The rotation into software and stay at home, it just feels like it's around the corner. I think this Fastly chart is, along with the Netflix chart, is a reason why. This is a 1, 2, 3, 4, 5 large degree wave 1, and ABC correction puts in a large degree wave 2. The length of wave A has reached the length of wave B. The length of wave 1 placed at the wave 2 low. As crazy as it sounds, there's a run that takes Fastly to 165 in order. The only problem with the Fastly setup is that this is a growth stock. This thing flies, and the 78.6% retracement is the most reasonable stop, and that's really too close to where the current price is. You're almost asking to get stopped out. But I love this to have exposure to the software sector. Wave 1, ABC wave 2, the length of wave 1 places the wave 2 low, takes Fastly on a crazy run to 165. In the longer term cycles, I think, right now, once we see this wave 2 low put in, then yes, I will come out and say the length of this run placed at this low is going to give the time target. I need to see the wave 2 low be put in, but eventually I'm looking for a run from 316 to 1012. A 7 to 8 month run will be replicated on Fastly. That will take it to 165, 37 right now. I want to get further and further away from 37. Once we reach 165 in the longer term cycles, maybe a year from now, maybe 8 months from now, then we'd have a shallow wave 4 correction before a fifth wave took Fastly as high as 262. So Fastly has a lot of upside. I just talked about going into the 260s, and that really wasn't with much voodoo at all. So, we see these growth stocks are setting up for, massive, massive, massive gains. We're making fun of the growth investors now. Don't worry. We made fun of the metal miners when they were making a life-changing decision last quarter. The quarter before that, we were making fun of the airline, and the boomer stock bulls, right? Before they outperformed the growth stocks, they were being made fun of. Now, Cathie Wood, that ARK side of the market, with Netflix and Amazon and Apple and Tesla, is about to have a dramatic outperformance this summer. Fastly, I think, is just a microcosm of that. 1, 2, 3, 4, 5, large degree wave 1, A, B, the length of wave A reaches the length of wave C. We're in the 78.6 to 61.8% retracement zone, and implied volatility is at the very bottom of its 1 year range. I'm thinking a huge move is coming for Fastly. I really do. I think a big move is coming for Fastly. I think we have entered, the growth and tech bull market, and a lot of people just don't realize that. And we can't assume that, right? We can't assume that. That's why I'm going to talk about these oil stocks, Carnival Cruise Lines, and Boeing. This is XLE. I just want to touch on XLE, real quick. This is clearly the 161.8% extension of wave 1. So that's 61, right? XLE, it's very reasonable to expect more upside for XLE until it reaches 61. This is wave 1, and ABC correction puts in a wave 2 low. And I believe this large degree wave 3, I mean, this is just really pretty right here, that it's subdivided into 5 waves. 1, 2, 3, 4, 5. The length of wave 1, place at the wave 4 low, takes XLE to exactly 61.42. And then, I mean, this is just beautiful right here, that the length of this wave 1 placed at the wave 4 low takes it to 61, which is exactly the 161.8% extension of wave 1. That's just wave 3, shallow wave 4 correction. Then all of wave 1 is replicated for wave 5. Oil has a lot of upside. What I think is really cool about oil, it's already broken this 311, this early March high, right? It's already broken this high. We'll talk about Boeing and Carnival Cruise Lines, how that's the same high. We're already asking if most of the airlines will break. But I think we've already actually been giving the answer from oil that, yeah, that wave 3 high will be broken. And I just want to show Marathon Patent Group. I talked about Chevron before. Chevron and Marathon Patent Group, they've already broken above that high of wave 3. So I'll show that right now with Marathon Patent Group. This is a wave 1, a wave 2, and a wave 3, and a wave 4. So this is MPC. Many might not be familiar with it. It's just another oil company. I don't really do like very, in-depth fundamental analysis on the oil stocks. I really don't. I'm all technical, but this looks like a leader right here in this sector. That this is a wave 1, a wave 2, a wave 3, and a wave 4. And what I'm really trying to show with MPC, like XLE, we've already broken this mid-March high, right? When we look at the airlines, when we look at Carnival Cruise Lines, we'll see we've already broken that. It's the same high we're asking if we're going to break. But MPC, Chevron, and XLE have already broken this high. This is wave 1, wave 2, wave 3, wave 4. The length of wave 1 placed at the wave 4 low. This is a move from 10-2 to 12-10. I mean, this is 6-8 weeks now. From now, we will see Marathon Patent Group 10 points higher at 69, so long as this low of about 51 holds. I like MPC. I like Oxy, probably even better, right? But I just wanted to show that Marathon Patent Group and Chevron have already broken above that early March high. So has the entire sector ETF XLE. I'll do a quick update on Oxy. I like this one. I really do. This is probably one of my favorite oil stocks. A wave 1, a wave 2. You really can't call this a wave 3 and a wave 4 because we're past the 61.8% retracement. I think Oxy is nesting right now. This is a wave 1. This is a wave 2. This is another wave 1. This is another wave 2. It's all over the straddle screener. It's all over the strangle screener. Implied volatility at the very bottom of its 1-year range. Premiums cheap. To me, this is just another example of the options market being very aware that the bull market for oil and the bull market for the industrials is coming, before the traders realize it. But this is wave 1, wave 2, and another wave 1, another wave 2. So because the length of this move placed at this wave 2 low is shorter than the length of this wave 1 rally, it's going to provide our conservative wave 5 target. The conservative wave 5 target is that this move is from 10.29 to about 12.10. So about 2 months, 2.5, 3 months from now max, we're going to see Oxy all the way at 35. I think realistically, it's probably going to go a lot higher than that. I think will really be the length of this wave 1 placed at the wave 2 low. And this move in black would be the real target. And that would take Oxy all the way to... That would take Oxy all the way to 37. So 37 to 35, I really think 2.5 months from now, we're going to see Oxy hit that level. And, the most reasonable stop right here would be 19. This low of 19.46. The clear invalidation level would be a break below the beginning of wave 1. That's too low. That's 16. If Oxy's above 19, I think this is a pretty high probability setup. It'll be between 37 and 35, 2 months from now. I think it's also pretty interesting. This mid to early March high has already been broken for a ton of other pieces of the oil sector. Let's get back to Carnival Cruise Lines. I thought Carnival Cruise Lines was really interesting because it had been showing up all over the straddle and strangle screener. And it had, as someone pointed out, I thought this was really impressive. Someone actually tweeted at me that Carnival Cruise Lines was at the very bottom of its 1-year implied volatility range in the very beginning of May, right? And then very recently, last night, we saw Carnival Cruise Lines up in post-market. It was up in post-market on news that it had started cruise lines to Alaska. So I don't know anything about fundamental analysis, but I do know when stocks are on these low implied volatility screeners, like the straddle screener, like the strangle screener, somehow, some way, big news seems to follow in pretty short order, as I showed with AT&T and Microsoft. So this is Carnival Cruise Lines. Just to reiterate, Wave 1, ABC, Wave 2, 161.8% extension of Wave 1 is 36. That hasn't been reached yet. I believe we're going to get there by filling out this bull flag, going from 125 to about 315. I think 2 months from now, 2.5 months from now, very conservatively, Carnival Cruise Lines is at 36. Has a shallow wave 4 correction, then goes on a fifth wave higher. And that, this to me is all just proof that the market has a lot more upside. I like Boeing too. Here's Boeing. We talk about it in almost every video. This is the wave 1, an ABC correction, puts in a large degree wave 2. We go on another wave 1 and another wave 2, another wave 1 and another wave 2. The length of wave 1 places the wave 2 low, takes Boeing all the way to 296. The 161.8% extension of wave 1 is 307. That hasn't been reached yet. I think Boeing, another one, all over the straddle screener, all over the strangle screener, had a lot of news today about increasing their output for the 737 MAX. That allegedly is what drive the price higher. I think they had an analyst upgrade too. But another example, this has been all over the straddle and strangle screener for the past month, right? This is ready for a huge move with the airlines. I think this is wave 1, wave 2. The length of wave 1 places the wave 2 low, takes Boeing to 296. The length of wave 1 places the wave 2 low, takes Boeing to 305. That's basically the 161.8% extension. So 296, 305, I think that's going to be reached in the next 2.5 months. I really do. The 78.6% retracement is the stop. That's 210. The invalidation level would be below the wave 2 low of 191. So that's all the stocks I have to talk about. I think the industrials are proof that we're going higher. I think oil has already told us we're going higher. Man, this Nvidia thing, people are just ignoring Nvidia. This huge downtrend break, this clear start of a new cycle, this clear end of an ABC correction, and it's just being ignored. I think that's really interesting. Microsoft, to me, lots of evidence that big tech is going to go higher. And I really think these Apple and Amazon sister accounts, right? People are afraid to say Apple's going to go higher. People are afraid to say Amazon's going to go higher. And that's the point, right? That's just the point. I think that these really will follow Microsoft, follow Google. Big tech will go much higher. And, I'll talk about Bitcoin, Ethereum, Litecoin, and Ripple. I want to talk about the bigger picture. So we're going to kind of get into a little different zone for this last half of the video. First, I talk about options a lot in this video, so I'm obviously not qualified to give any type of, investment advice, but I want to talk about the options market just a little bit more. Talk about why implied volatility is so important. So implied volatility, basically, long story short, says that options are cheapest when premiums are cheapest, or option premiums are cheapest when implied volatility is at its lowest. So when implied volatility is at its lowest, remember, Microsoft was, at that range, in this area, right? This was when Microsoft's implied volatility on 322 was at the very bottom of its 1-year range, right? So consolidation, boringness, right? But the options market is having extremely cheap premiums. And so what's going on? Well, in the options market, you don't just pick if a stock's going to go up or down. You pick whether or not it's going to move at all. Okay, so, a lot of times I'll say, hey, a stock's going to be higher in 2 months, 2.5 months. But would I ever actually buy an option that expires in 2 months? To me, the answer is no. And I actually would never buy an option if the price overview for bar chart didn't say that the implied volatility rank and the implied volatility percentile were below 5%. And the reason why is because of theta. So theta, this is the chart that people who sell covered calls, people who sell options, you will see this chart every day. Theta, how much gets burned from a call option or a put option simply because of time decay gets exponentially faster as the expiration date gets closer. So if you have a call or a put that expires in less than 60 days, they've got you listed out as a sucker, right? They'll tell you anyone who's holding an option that expires in a month is a sucker. Right, they'll tell you that in the options market right here because of this massive time decay, right? The closer you get to your expiration, theta becomes exponential. What also causes theta to increase, right? Theta is a bad thing if you're an option buyer. If theta is high, your premium is losing money because time goes by, okay? You do not want to be making the bet that time will not go by. So one reason that I buy options with extremely low implied volatility, where these numbers, the IV rank and IV percentile, are both well below 5, is not just because implied volatility is cyclical, so stocks will go from not moving a lot to moving a bunch, but it's also because when implied volatility is low, theta is at a discount, right? But if you buy an option on a stock with extremely low implied volatility, then theta is dramatically higher, and you're paying for a lot of theta. That means you're making a big bet that time won't go by, right? And that's not the bet you want to make. The people who sell covered calls, they'll tell you this on day one. They want to sell you an option that expires between 30 and 40 days and has a delta, which is the likelihood that it will expire in the money, of about 30. So they want to sell you an option that expires in 30 to 45 days because that's when they know time decay is at its worst. So how do you defeat theta, gang? The first thing to do, in my unprofessional, unlicensed opinion, because options trading is extremely risky and I'm not qualified to give investment advice in any way, the first thing to do to beat theta, gang, is to only buy options on stocks with extremely low implied volatility and buy several months. You know, I do a kind of a leap only approach right now because if it's several months away, you know, theta is nothing, right? Theta is almost non-existent, right? But if implied volatility is high and the option expires in 90 days, theta is destroying your account. And if you ever have an option in your, portfolio that expires in 60 days, the options market will tell you you're a sucker. You're a sucker, right? They'll tell you that. So don't do it. This is Bitcoin. I want to talk about Bitcoin, Ripple, Ethereum, and Litecoin. Talk about these bigger term pictures. So what's one of the reasons that I'm, pretty bullish about crypto in the long term? Well, really, I use correlations in my analysis. I do it pretty well. It doesn't make every trade work. But if I see right here, this is, kind of this was kind of my thesis coming into 2021. The longer term crypto bull market wasn't going to end until Ripple went all the way the length of wave 1, placed at the wave 2 low, and reached the median of this pitchfork, and the equal X target was about 3.40. And to me, Bitcoin had, Bitcoin, Litecoin, Ripple, and Ethereum had all formed these wave 1s, and they had a wave 2 correction. And then when Bitcoin broke the wave 1 high, which I predicted down here, I had many tweets in October about Bitcoin exploding, to 22,000. When it broke above this high, I immediately went to look at Ethereum, Litecoin, and Ripple, and I said they all have the exact same, setups right now. So let's look at Litecoin. Let's look at Ripple. This is the Litecoin chart. To me, this is the smoking gun, against calling a major top in the bull market. That this is a wave 1 and this is a wave 2. I mean, and just look at this. One day I promise this will make you cry. But this is the beginning of a wave 1. We have an A, B, C correction. We put in a wave 2 low. You connect the beginning of the wave 1 with the high of wave 1 and the low of wave 2, and look at that reaction on that wick. That beautiful wick on the median of the pitchfork, right? These beautiful wicks for Litecoin on the median of the pitchfork, right? And then what happens? Pitchforks don't work. Pitchforks don't work. Oh, wow. Wow, where did we stop? At exactly the median, exactly the lower bound of this pitchfork. I believe Litecoin is destined to go to the median of this pitchfork for this wave 3 target. And Ripple and Ethereum have already done this, right? And I think Ripple, like Litecoin, is another smoking gun to calling a major top in the long-term crypto cycle. This is a wave 1. This is an ABC correction putting in a wave 2 low, right? Connect the beginning of wave 1 with the high of wave 1 and the low of wave 2, and just look at that, man. Look at that. Anyone who caught Ripple under here, you have that tiny little wick to thank, because I saw that wick in the middle of that median. I was like, oh, that's pretty. And then once we tagged it again, it was game over, right? I was posting about it a ton in this range. But this is wave 1, an ABC correction puts in a wave 2 low. Gorgeous pitchfork with a gorgeous reaction on the median, right? Pitchforks don't work. Oh, yeah, pitchforks don't work, man. I promise pitchforks don't work. Oh, right, we're back at the median, and now we're going to go all the way, or we're back at the lower bound. Now we're going to go all the way to the median, right? So for me, Ripple reaching the median of this pitchfork, which would take it well past 3.40, is, kind of when I would even look for a pause, in the longer term crypto bull market. And Litecoin, I feel very similar about, where this is a gorgeous pitchfork, a textbook, wave 1, ABC, wave 2. We've already seen Bitcoin and Ethereum break above this high and reach the median. I believe Litecoin is another smoking gun where it is going to go to the median of this pitchfork. So let's count Litecoin. I think if we can count Litecoin, we can count Ripple, and we count Ethereum. So if we count Litecoin as a wave 1, an ABC correction, wave 2, another wave 1, and another wave 2, we got a couple things to say. If this is a wave 3 and a wave 4, then we're calling this a wave 4 that has passed the 61.8% retracement of the prior impulse. Usually that's going to be incorrect, right? Now, it is a wave 4 that perfectly retests this wave 1 high, okay? So here's the thing. Either way with Ripple, either way with Litecoin, either way with Ethereum or Bitcoin, I believe that this whole run from March 2020 to 5/10/2021, right, which is over a year, right? We're not talking about something that's going to happen tomorrow, will be replicated. All right, and here's why. This is a 1-2, 1-2, 1-2, 1-2. Now we have another impulsive wave. So if this impulsive wave, and pay attention to this, is the exact same thing for Ethereum and Bitcoin. If this impulsive wave is a wave 3, and we're putting in a wave 4 low right now, then wave 5 will either be the length of wave 1 or it will be the length of wave 3. So if wave 5 is the length of wave 1, then Litecoin would stop right here, right? Litecoin would not make a new high, right? And then that means that this wouldn't be a wave 5. So that's not what it's going to be. In my opinion, no matter how you count this, it's going to be the length of wave 3 placed at the wave 4 low. Ultimately, Litecoin will begin a run to 541. It will begin a run to the median of this pitchfork, and that we're going to see Litecoin in the 540s a year from now. Okay, this wave 1 high is 145. The 61.8% retracement is 173. Really, 145 is the only kind of invalidation level that we have. So if Litecoin's above 145, then we're going on another leg higher. We're going to reach 541 in the next year. And that's if it's a wave 3 or a wave 4. It most likely is not a wave 3 or a wave 4 because we've passed the 61.8% retracement. So this is probably another wave 1. And then at the 61.8% retracement, we're putting in another wave 2. The only difference here is that when we reach the length of this move placed at this low, which is 541, then that's not the top for Litecoin, right? It keeps going higher. And I think ultimately we will see Litecoin go all the way to the median of this pitchfork, which would be extremely high. So keep that in mind, because Ethereum is a pretty similar story. It's a wave 1, it's a wave 2, and then it goes on a huge impulse, and now it looks like it's completing another wave 1 and another wave 2 at the 61.8% retracement. So Ethereum's levels are a little clearer. The 61.8% retracement is 1720. So if Ethereum is above 17.20, then this wave 2 idea is still valid. Now, I know that's a little far away, but if this is a wave 1 and that is a wave 2 low that we put in at the 50% retracement, then Ethereum's next big run a year from now takes it all the way to 6,281. Right? That's the length of this move placed at this low. Right? And that's if it's a nest, right? If it's a nest, if it's 1-2, 1-2, then that's not when Ethereum will top. All right? That would just be the conservative wave 3 target. What if you wanted to be a little more conservative, right? Well, the more conservative view would say that this is the wave 3, this is the wave 4, and then wave 5 would be the length of wave 3 placed at the wave 4 low, right? Because it couldn't be the length of wave 1. It's just like Litecoin, where if it was the length of wave 1, then a year from now, right, the year from now target for Ethereum can't be the length of wave 1 because that would just take it, below this wave 3 high. I believe if you count this as a wave 3 or a wave 4 at the 50% retracement, it's still 1720 is the stop in the invalidation level, but then the length of wave 3 placed at the wave 4 low would take Ethereum all the way to 6,281. The only difference with calling this a wave 3 or a wave 4 is if you call it a 3 and a 4, then when you get to 6,200 about a year from now, you're looking for a major top for Ethereum. So What would be, probably a real invalidation? Nah, I think that the 61.8% retracement of 17.20 would be a good invalidation. But I think Litecoin really gives the best view right now of this 1-2-1-2 Elliott wave nest being put in. I think Litecoin and Ripple have both given a ton of evidence in the long-term cycles they're eventually going to reach the median of this pitchfork. That's very good for Ethereum. That's very good for Bitcoin. Bitcoin is almost identical to what I just said about Ethereum, where it's a 1-2 and then it's another 1-2 being put in at the 50 to 61.8% retracement. So this is it's the exact same thing. It's either another wave 1 and a wave 2 low being put in, which Litecoin would suggest. All right, this would be extremely aggressive. The 61.8% retracement, which is 27.4K, will hold. The length of wave 1 placed at the wave 2 low would take Bitcoin all the way to 91,000. All right, and I do believe, a year from now, Bitcoin will be at $91,000, right? And remember, if this is wave 1 and wave 2, that's the length of wave 1 placed at the wave 2 low. We're looking at very conservatively $91,000 because that wouldn't be the top, right? That would just be the conservative wave 3 target. What if you thought that was ridiculous? Well, the little more conservative count would be that this is a 1-2-1-2. This is a wave 3 and a wave 4 being put in. Then just like just like Litecoin, just like Ethereum, you couldn't have it be the length of wave 1 placed at the wave 4 low, right? Because then wave 5 wouldn't break to a new all-time high. It'd be wave 3 placed at the wave 4 low. We'd see Bitcoin still reach 91,000, but then that would be the quote-unquote the top, because that would be wave 5. I really think it's the same thing for Ethereum. It's the same thing for Litecoin, and it's the same thing for Bitcoin. It's a 1-2-1-2 Elliott wave nest. A year from now, we are going to see Bitcoin at 91K. I want to see that 61.8% retracement of 27,000 hold. I want to emphasize 91,000 in the longer term cycles is conservative. All right, because that's just the length of wave 1 placed at the wave 2 low. That's the conservative wave 3 target. We have a shallow wave 4 correction before this whole move is replicated yet again.